All right, TGIF, which stands for Thank God It's Friday, which refers to a trading setup that we can capitalize on a Friday. Now, we first need to understand with a TGIF that the middle of the week is the trending conditions. So Tuesday, Wednesday, and Thursday, they are known as trending days. Again, Tuesday, the trend starts. Wednesday, the trend is usually busy, as a general rule of thumb. Thursday, the trend, later during the Thursday, the trend can end. And then Monday and Friday are known as counter trend days. Now, this is a very general rule of thumb, and we need to know how to apply it actually, how to look at the days as well, to know if we can still trend or if we can actually be a counter trend day for that Friday, for example. So that is where we have a checklist. And the Thank God It's Friday checklist is the following. We start off with the first one, which is a trend right there. Move away from the open of the week. Because if we move away from the open of the week, that creates somewhat of a trend. Again, the trend does not need to be picture perfect. As long as we move away from the open of the week, that's important. So we have at least somewhat of an expansion. Perfect. And Tuesday, ideally, but even if Monday, Tuesday, or Wednesday is the high of the week, that's perfect fine. As long as we have a significant move away from the open of the week. I'll show you in a bit what that looks like. Then the second one right there is resistance. We want to move into an opposing PD ray. Thank God It's Friday is quite simple and quite straightforward, because essentially all it is a two candle rejection where the first candle fails to reject and the second candle is a previous day high, previous day low sweep to then create the rejection, which happens coincidentally on a Friday. And then we call it Thank God It's Friday setup. But it could even be a Thank God It's Thursday, Thank God It's Wednesday, because all the same thing happens right there. It's just the way the days right there line up for a Thank God It's Friday setup. But all we're trading is a two candle rejection off of an opposing PD ray, off of that resistance. Now the third one is Thursday right there. Thursday, a high/low close in that resistance on Thursday. So meaning two candle rejection, the first candle, which is Thursday right there, fails to reject. So then Friday can sweep the previous candle low of that Thursday, for example, to then create that counter trend move, that second rejection that we can get off of that resistance area. Now, the first three steps is identifying Thank God It's Friday setups right there and areas. The last three steps, so 4, 5, and 6, is how we can capitalize on it. But I first want to go over 1, 2, and 3 in the chart. All right, here on silver, we have two Thank God It's Friday setups that we're going to take a look at. The first one that we have is this one right here. I'm going to mark out the Friday. That candle right there, the down candle, is the Friday. So if we take a look at this Friday, what actually happens at that moment in time? Well, we first of all have the open of the week, which again started right here. This is the open of the week. This line right there, that's the Monday. The Monday expands higher. Perfect. We create then a fair value gap on that Monday. We continue higher off of that. Again, all those things, they are potentially extra arguments, extra confluences. Are they super relevant? No, not necessarily. As long as we move away from the open. That's important because in order to reach an opposing PD ray, we need to move away from the open of the week. Otherwise, we are not going to go anywhere and we'll never reach an opposing PD ray. That's the important part. So here, we reach an opposing PD ray right there on that Thursday. That's perfect. And that Thursday right there, what do we see, is a high close. So all that we're trading right there at that moment in time is a two candle rejection right there off of that opposing PD ray. And then we can counter trend trade that on a Friday. And again, this happens on all kinds of days, right? Because this might also happen on a Wednesday, on a Thursday. But if it lines up throughout this week, where the beauty of this is where we can capitalize on the main trend throughout the week. So on Wednesday, Thursday, we could have traded off of this daily value gap to capitalize on the main trend of that week. Then Friday, we can have a bonus. Thank God It's Friday is not supposed to make your week. Meaning, if you rely on a Thank God It's Friday to make the main profits of your week, then something went wrong. Then something went wrong throughout the week. Because this is always going to be a lower probability trade setup than just following the trend. It's a bonus right there. It's if you had a good week already and say, let me take a look at Friday as well and see if we have Thank God It's Friday setup. Well, we have a beautiful Thank God It's Friday setup here. Let me risk the half of what I risk throughout the week. So let me not blow all the profits. That's very important. And then let me just go ahead and trade that thank God it's Friday setup because I am in a flow state. I'm feeling good, and I think we have a good opportunity right here. But it's not with the intention of I have thank God Friday setup here. I had a losing week or I had a break-even week right here. I'm going to capitalize fully on a thank God Friday setup. No, never be reliant on Monday or Friday trading. That's very important to understand as well, because that's going to end up in a disaster. Now, this right here is a picture perfect thank God it's Friday setup. And if we now look a bit further, then we also have a thank God it's Friday setup right here. And you might ask, which PD array are we actually coming into then? Well, we had this fair value area right there towards the left right there, which is a weekly fair value area. So here on the daily, what do we see? We see again, let's mark out the open of the week. Let's count the days right here. We have this Monday candle right there. That's the open of the week. Okay, Monday also creates the high. It's not a beautiful weekly range or anything right there. But afterwards, we do have a move into an opposing PD array right there, into resistance again. That's perfect. Thursday is a low close. Friday sweeps the low right there. Previous candle low. Again, just a 2 candle rejection, right? That's all it is. To then continue higher and target higher right there as well. That is what thank God Friday setups looks like. Now, let's give a few more examples. On Australian dollar, US dollar, whilst in the overall consolidation, we can also see another one, which is a little bit more disguised. But overall, it is also thank God Friday setup. We could argue it's a little bit less probability, but still thank God it's Friday setup. We have this order block, the nested order block right there. Wednesday actually already comes into it, does not reject. Thursday also comes into it, does not reject. Overall, we had a move lower. So this is where the week started right there. That's where the week opened. A move lower from the open of the week. So we had somewhat of a weekly trend. That's important. So it's not just a consolidation where we don't even move away from the open of the week. Because otherwise, again, we can never reach the opposing PD array in the first place. So here, and what do we see? Well, it almost becomes a third candle rejection right now. And then we sweep the previous day low on the Friday by Thursday right there. And then we continue higher again right there. So if every day during that week is a down candle and we have a Thursday low right there, which is close with that Friday as well lining up, we can see previous day low sweep to then Friday continuing higher right there. It all starts with the steps before that, before you actually dive into a sweep. Because if we look at every single Friday for a sweep of the Thursday high and low, that's not going to work. And that's going to, again, end up in a disaster as well. So to give you an example right here of what I mean, it's just a 2 candle rejection, is that when we continue lower and we reach this swing low right there, which is again also an opposing PD array, the swing lows also count. And afterwards on that Wednesday, we have a very low close. Then on that Wednesday, we sweep the previous candle low right there on that Thursday to then continue higher. And then the Friday is just a consolidation because the Thursday right here already created the low of the week. So it's important to understand how the weekly overall forms. Is Thursday at the moment in time when we look at a thank God Friday setup, is Thursday the current low or high of the week? If that's the case and we are in an opposing PD array, that's good because then we can have a thank God Friday setup. If that's not the case and Thursday is already rejecting like this, for example, then we don't want to trade that Friday right there, at least not for a thank God it's Friday setup intention. And that's very important to understand that all it is a 2 candle rejection that happens to be on Friday. So the first candle fails to reject. Second candle happens to be a Friday as well. So the second candle can sweep the previous candle low to then create that rejection, which again, like I mentioned, and the reason why I mentioned this, so happens to be on a Friday is because that's the important part. Because here, if it already happens on a Thursday, if it already happens on a Wednesday, then it's not interesting anymore. So here we already create the trend of the week and Thursday creates the low of the week, which we can see by the big candle rejection right there. If Friday wanted to create the low of the week right there and become the previous day low sweep to then continue higher and reject, thank God it's Friday setup, then Thursday should have continued lower a little bit and be a low close as well, which is not the case. Very similar right here to an example on the left where we have this swing low that we reach and the Friday here is already a big rejection. So Thursday can be just somewhat of a consolidation, and you can both see it reaches for those fair value gaps right there. But Thursday right here already reached that PD rate, and that is important to understand, because then Friday is not interesting anymore. It's not interesting for trending, overall trending ID. It's also not interesting for thank God it's Friday setup. It's both not interesting in this case. All right, so we know how to identify the thank God it's Friday setup, which is arguably the most important part, because not every week we'll have good thank God it's Friday setups. Very important to understand. Then the fourth step is Thursday's low. So we mark out Thursday's low, like we already did in the first 3 steps as well, actually. Then the fifth step is sweep. Sweep below the low and back above. I'm using a bearish trend, bullish thank God it's Friday setup example right here, where we use the Thursday's low. If we want to use the Thursday's high, it's of course the exact same thing, just inversed. So sweep below the low and back above. So we want to see a move below and back above Thursday's low. That's important. With a 15-minute sharp turn right there. Then the sixth step is an opposing fair value gap. The opposing fair value gaps are our targets right now. Typo out. Are our targets right now. So what does that look like? All right, let's first take a look right here at this silver example where we had this thank God it's Friday setup. We have this Thursday's low right there. It's lining up perfectly for thank God it's Friday setup. Perfect. Now, at this moment in time, we can go into the 15-minute time frame to look at this Thursday's low. The Thursday's low can oftentimes be a little bit vague as well, as long as the same low lines up right there with the thank God it's Friday setup low right there. So with the Thursday's low. If it looks a bit vague, if it looks a bit weird overall, which can happen, don't worry about it right there. We can just simply use that line that we have on our chart. Then we want to see a sweep below and back above. So what does that mean? We want to see it right here sweeping. So actually reaching that low and coming below that low right there. But afterwards, immediately rejecting back above the low right there. That's important. If we don't reject back above the low right there, then there's no trade ID. So for example, if we continue lower right here and we create a 15-minute ST below the low, that's not a trade ID. We need to have that 15-minute sharp turn above the low right there. That's important. Now for thank God it's Friday setup, you can again get very creative with the entry. The main part for the thank God it's Friday setup is that we have that whole setup of the Thursday low right there with then a Friday sweep to then creating potentially a 15-minute sharp turn. But even a 5-minute ST plus re, even a 1-hour stick entry, for example, 4-hour stick entry, get creative with how you want to enter off of it. Because I'm going to show you a 15-minute sharp turn, but you don't necessarily need to use a 15-minute sharp turn. So the entry is up to debate. You can get very creative with the entry, as long as you understand the premises until we reach that entry. Meaning, everything until now needs to be followed. You need to have somewhat of a move away from the open of the week. You need to reach a resistance area. You need to sweep Thursday's low, or Thursday needs to be a low close in this case. Friday needs to sweep it, meaning we need to have a move below it and then a move back above that low right there. So whatever the entry is, those steps need to happen. Afterwards, do your thing right here. Click buy or sell, whatever you want to do. Use the fair value gaps, use the fair value area that we have right here. However you want to capitalize on it, capitalize on it. As long as, again, as it's repeatable, right? Every thank God Friday setup, you want to do the same. So you want to have the same entry pattern consistently. But the entry pattern, you're not limited to only a 15-minute ST. That's what I'm trying to tell you right here. So if we enter, so we had a few rules in the past as well, where you would always enter on the first fair value gap right there in the sharp turn actually. So not the second one, the first fair value gap right there, which is interesting. You could use that as well. You can also say that you only want to see the sweep in London happen, which was also a rule that we used to have. Now I want to come back to that. I don't think that's necessarily, that is very useful anymore, that you only want to see the sweep in London. But again, if that's a rule you want to add, then that's a rule you can add as well. You can also use, okay, I'm only going to enter over the overlapping defense right there. Now let's just assume we take this 15-minute sharp turn and we cover the bodies right there. Okay, let's see. What are our overall targets right here? Our targets are fair value gap towards the left. So we also have to take into account right here this stop loss is quite large. And a large stop loss is not necessarily bad in a trade ID, but this is not a trending trade ID, right? We're trying to capitalize on a small counter trend move. We're not expecting the whole move that we had lower throughout the week to all of a sudden get countered with a move like this. No, we're capitalizing on that sweep and a small Friday. So Friday essentially being somewhat of a consolidation, counter trend move, but not a very volatile day. That's very important to understand. So that also means your stop loss should, well, you should place your stop loss accordingly to that. If you have a very big stop loss like this, yeah, well, then it's going to all of a sudden turn into a trending trade. And that's not the goal. It's a thank God Friday setup. It's very important as well. So here, what we can do is we can look at the 1 hour, at the 4 hour right here. Where do we have fair value gaps? Well, this is one big 4 hour fair value gap right there. Okay, can we disrespect that fully? And can we maybe reach for the high of the fair value gap right there? Do we have anything on the 50 minute to get a more clear target? On the 50 minute, that lines up with a swing high sitting right there. So that could be quite an interesting target. So either we enter off the fair value gap right there, or let's say we enter off of the overlapping defense right here, which in hindsight is of course a good entry right now. Cover the bodies right there. Would have been a nice 1 to 2. Again, we're always targeting a 1 to 2. If you can't reach a 1 to 2 and the 1 to 2 RR is very far away, for example, in this case, the 1 to 2 R is quite far away, go break even at least until we reach, once we reach the target, and even closing at a 1 to 1 RR is not a bad idea for a thank God Friday setup. Again, experiment with that. Because if the target is something like this, then a 1 to 1 RR is also doable right there for thank God Friday setup. Again, we're not looking to make the week for a thank God Friday setup. We're just looking to get a bonus to next to our salary. We're trying to receive an extra bonus. That's it. So this is how you can capitalize on the thank God Friday setup. Now, if we take a look at this example right here that we had, then what do we see here? We see here that we have this Thursday's high sitting right there. After reaching that Thursday's high, we get a few sweeps above it right there, a few more sweeps as well, which is really not that interesting. And afterwards, we get a fair value gap, well, not a fair value gap going higher, but we do get a move higher right there. We get a move lower. Overall, the sharp turn is quite ugly. Again, we still want a good entry pattern, right? It's very important because the difference between this entry pattern and the previous entry pattern that we had on the previous example, I would argue this is a lot lower probability already, just purely based on the entry pattern. Because here we are also sweeping this low right there. So it's not a very good sign right here that we actually might want to continue lower off that 50-minute sharp turn right here. But let's say we do right there, and let's say we do place an entry, then this would have been the entry right here as well if you want to use that 50-minute sharp turn. Now, what would have been the target? Let's see, what do we have? On the 1 hour, we already sting into fair value gaps right there. On the 4 hour, we have also a sting into fair value gaps right there. So again, we want to take into account these fair value gaps because essentially if we want to continue higher, like in this example, then most likely we are going to continue higher off of those fair value gaps. Usually tends to be 4 hour fair value gaps that we reach for. That's important to understand because we don't want to, well, we want to avoid a situation like this where we actually are shorting into a 4 hour fair value gap right there. So if you ever see a situation like this, then here, this entry pattern is not a good entry pattern because now you're trading against a sweep, you're trading against the 4 hour fair value gap right there. Wait for more confirmation if you do want to capitalize still on it. Otherwise, it's just not a good entry pattern right here. And you might want to wait until later if we still get it, thank God, for our setup. If not, then we don't want to do anything. So if we take a look right here, later that day, we actually reach below that low again, or below the high, sorry. And then afterwards, we still get somewhat of a setup, but even that is not that interesting anymore because again, it's very late throughout that day right there. All right, I do believe we have a good understanding of the thank God Friday setup, how we can potentially capitalize on it. Again, the first steps are arguably the most important steps right there. The entry and how you want to enter the sweep is still important, but the entry with a 50-minute ST, that can be up to debate, right? However you want it to be right there. What is your usual entry pattern? So if throughout the week, for example, you use ST plus re-entries, then is it very logical to all of a sudden use a 50-minute ST entry? I don't believe so. Then you might as well refer to an ST plus read entry as well for the Thank God It's Friday setup. Or if you use stick entries throughout the week, and all of a sudden you need to use a 50-minute sharp turn entry, if you want to use Thank God It's Friday, then again, my advice would be, well, why not use as well a stick entry? So see if a 1 hour stick entry is very valid, or 4 hour stick entry, or we might already miss the move right there with 4 hour stick entry. That's important to understand. Now, if we then move on, because throughout a lot of days and throughout a lot of weeks, we also won't have a Thank God It's Friday setup. When we don't have Thank God It's Friday setup, that means we can trend on a Friday, usually. Now, what does that mean? On Thursday right there, Thursday didn't move into an opposing PD ray. Then Friday can be a trending day right there, because Friday can still reach that opposing PD ray. So what does this look like? This tends to happen when the volatility is at the end of the week. So for example, a CPI or FOMC week where we have volatility at the end of the week, or even an NFP week, of course, as well. Then we tend to have Thursday and Friday being quite volatile. Then Thursday does not reach the high or does not reach the PD ray, and Friday can reach the PD ray, can still be a trending day. So for example, what we saw in the past week right here is that we have this high. And of course, we can even mark out these highs afterwards as well, those premium rays. Thursday is not reaching right there into any premium ray. That means Friday can still continue higher right there to reach for premium rays. So essentially, if the checklist of Thank God It's Friday setup is not checked off, so it's not valid in that manner, we are not reaching into an opposing PD ray on Thursday right there, we don't have a high close, things like that. Okay, then Friday can still reach for just a premium or discount array, and not only the previous candle high, etc., things like that. Now, right here, if we take a look at some more examples, we will see it very, very often as well, where here we do have a Thank God It's Friday setup right there afterwards as well. Now, if we take a look at this example as well, not a Thank God It's Friday setup, because the Friday here, like we discussed as well, or the Thursday, actually, sorry, already rejects as well. Then afterwards, we also have more examples here towards the left, where we have this swing high. Thursday is a rejection, does not reach a premium rate. The volatility is in Thursday and Friday right there. And then Friday reaches that premium rate and reaches all those premium rates right there. So it overall really depends on how the week lines up as well. That's very important to understand, because it's not just, oh, every week we'll have a Thank God Friday setup. No, it's, is there a place for a two candle rejection? Which is, do we reach an opposing PD ray? Does Thursday have a high close or a low close? Can then Friday sweep it, or sweep the high or sweep the low to then create that rejection counter trend? That's very important, because if that's not the case, then Friday can just be like any other day. It can just be a trending day and can just continue higher or continue lower. So that's very important to understand. So here on GBP US dollar, for example, we see the exact same thing, right? We see Wednesday sweeping this high. Then Thursday right here, this first down candle, is not reaching into any discount rate. So Friday can just continue the trend right there and actually reach the targets for that week. And there's a lot of things, I mentioned a lot of times, this is very important to understand. But it truly is, because if you do not understand a Thank God It's Friday setup, then you also do not understand when actually Friday wants to create a trending or a consolidation day. And the reason why it's so important to understand, because if you do want to look to trade to Friday, then you need to have some of those skills. So my advice is, for throughout the week, again, a Thank God It's Friday setup is only relevant, and that's the nice part, it's only relevant on a Friday. So on a Friday or on a Thursday, when you're looking to trade a Friday potentially, look, has Thursday reached an opposing PD rate? Do we have somewhat of a trend throughout the week as well? So move open from the week and move away from the open of the week. And then afterwards, okay, is Thursday a high or low close? So is there a reason for the first candle to not reject and the second candle to reject after sweeping the previous day high or previous day low of that Thursday? That's when you have a potential Thank God It's Friday setup. If that's not the case, you don't have a potential Thank God It's Friday setup. It's quite straightforward, quite simple, but there's quite some details going into it as well. Because if you do not have the thank God it's Friday set up, then Thursday can be traded like any other day, and usually tends to be the case that Friday can then be traded as any other day, and Friday can then just be a trending day actually reaching the target as well. And that's about it. That's a thank God it's Friday setup. All right, perfect. Thank you.